Crown Castle, one of the largest communication REITs in the market, reported great performance in 2022. Despite a challenging economic environment, the company managed to achieve solid revenue growth with an increase of 10.2% compared to the previous year. In addition to this, Crown Castle's net income showed a notable increase, increasing by 52.7% year over year. Even with these financial indicators though, the stock price has experienced a decline of around 31% year to date, and the stock is trading around 5-year lows. Today we'll take a 3-step approach to thoroughly evaluate Crown Castle and determine its fair value. Step 1. Margin of safety. In this step we'll assess Crown Castle's key metrics and ratios to determine if we should be more or less cautious when determining a fair value. Here we'll delve into Crown Castle's financial statement and assess critical metrics and ratios. In step 3, we'll be using a combination of valuation models such as funds from operations and discounted dividend model to get an insight into the value of the business. This step allows us to understand whether the stock is overvalued or undervalued in the current market on different metrics. In conclusion, by combining the findings from the 3 steps, we'll ultimately determine the fair value of Crown Castle as an investment opportunity. To determine the final value of the stock, we'll be using a margin of safety. This margin of safety will be based on the financial ratios, the financial health, and the growth of the company. I will be using a standard margin of safety of 25% that can never go below 0%. Margin of safety can either increase or decrease based on the ratios that we're going to be looking at and the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 colors in our scale, bright red will mean a 5% increase, orange will mean no change, light green mean a 5% deduction, and bright green mean a 10% deduction from a margin of safety. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and bright green will mean a 5% deduction. First metrics that we'll be using are the margin and EBIT growth. The EBIT has gone up over the years, going from $433 million in 2016 to over $1.7 billion in 2022. The average EBIT growth during this period is 28%, which is a 10% deduction from a margin of safety. The margin is also looking pretty good, with the margin percentage being 11% in 2016 and going all the way up to 25% in 2022. The average margin growth during this period is 15.4%, which is way past the green part of our scale, which indicates a 5% deduction in the margin of safety. The next metrics that we'll be using are the dividend growth and the debt to EBITDA. The dividends have gone up nicely over the years. It's gone from $3.28 a share in 2015 to $6.28 a share in 2023. Average dividend growth in this period is 15%, which is a 10% deduction from a margin of safety. The debt to EBITDA is calculated by taking the debt of the company, subtracting the cash from it, and dividing it by the EBITDA. Out of this, we get the amount of years of EBITDA it takes for the company to pay off all of their debt, and for Crown Castle, this is a ratio sitting at just under 7 years, and in this case a 683% debt to EBITDA ratio, which is a 5% increase in the margin of safety. The final 2 ratios that we'll be looking at are the occupancy rate and the rent reversion rate. Occupancy rate is a key metric used in real estate analysis to measure the percentage of occupied rental units or properties within a specific portfolio. As you can see in the top left, only 2% of the properties of Crown Castle are vacant, which is very solid and awards them with a 5% deduction from margin of safety. The rent reversion rate refers to the potential for rental rates to change when leases are renewed or new tenants are acquired for property. As you can see, this margin has gone down over the years, in this case with 4% on average, which is a 5% increase in the margin of safety on this metric. Let's go look at the valuation models next to determine the intrinsic value of the company. The first valuation model that we'll be using is the price to FFO mean reversion. The price to FFO, or funds from operations mean reversion, is a valuation model used to assess the attractiveness of a REIT stock price based on its historical FFO multiples. FFO is a key metric for REITs as it represents the cash flow generated from their core operations. In this model, we compare the current price to FFO ratio to its historical average. If the current ratio deviates significantly from the historical mean, it suggests that the stock may be undervalued or overvalued and is expected to revert to its mean over time. In this case, we have imported FFO per share of 2021 and 2022, together with the share price. This gives us an average price to FFO of $25.91. Doing the same with the trailing 12 months FFO per share and the price, we get a trailing 12 months price to FFO of $12.82, meaning that it's significantly undervalued on this metric, giving them an upside of 102.2% out of this model. Second model that we'll be using is the dividend discount model. I've imported the dividend payouts of Crown Castle, the past 5 years, and on average they have grown it by 8.62%, and I'm projecting all of their future dividends to grow by 5%, and will be using a discount rate of 10% in this valuation, giving them a dividend discount model price per share of $131.46, which is just above a 30% upside of this model. The third model that we'll be using are the AFFO multiples. Adjusted funds from operations, or AFFO, is a measure that reflects the REIT's FFO adjusted for capital expenditures and other non-recurring items necessary to maintain the property portfolio. AFFO is considered a more accurate representation of the cash available for distribution to shareholders. The AFFO multiple valuation is similar to the price to FFO, but it uses the AFFO metric instead. By comparing the current market price to the AFFO, we can assess the relative value of the REIT compared to its peers. In this case, we've imported the price to AFFO of similar companies to Crown Castle, and on average in the industry it's sitting at 18.93, while the price to AFFO of Crown Castle is sitting at just over 14. Which means it's undervalued by this metric, giving them an intrinsic value out of this model of $136.29, which is again an upside of over 35% out of this model. The last model that we'll be using is the net asset value. Net asset value is a straightforward valuation model that estimates the value of a REIT based on the fair market value of its underlying assets minus its liabilities. The value of a REIT's assets is typically determined by the appraisals of its real estate properties. Net asset value can provide a good indicator of a REIT's intrinsic value. We've imported the net operating income of the previous year of Crown Castle and applied a growth rate estimate for this year, giving them a forward year net operating income of $2.6 billion, and we've applied a cap rate to this, giving them a value of their assets of $74.4 billion, and subtracting the debt from this, we get a net asset value of $46.4 billion, and dividing this by the amount of shares outstanding, we get a net asset value per share of $107.18, which is a small upside of 6.25% out of this model. Let's go look at the final overview of our valuation next. Looking at the final overview, we've imported the price to FFO, discount dividend, AFFO multiples, and the net asset value price per share, giving us an average of $144.72. And we have determined the margin of safety before this, with a standard margin of safety of 25%, deducting it by 10% for the EBIT growth, 5% for the margin, dividend growth, and the occupancy rate, and added 5% for the debt to EBITDA and rent reversion rate, giving them a margin of safety of 10%. Applying this margin of safety, we get a fair value of $131.56, and with the current price of $100.87, we get an upside of over 30%, indicating that it's a buy per all valuation. If we look at the price action history of Crown Castle, we can see that it deviates significantly from the fair value that we have determined. And you can also notice that indeed the stock is trading at a multiple year low. If the stock continues to go down, it might even be at a 6-year low soon, so let's see what happens. It will still need to turn around quite a bit if it wants to reach its fair value that we determined. If you want to get access to all of the models that I use in my videos and much more, you can check in the description for my Patreon link. And if there's another company that you would like to see me cover on this channel, please let me know in the comments, and thanks for watching.